Penguin Random House Audio presents A Man for All Markets, From Las Vegas to Wall Street, How I Beat the Dealer and the Market, by Edward O. Thorp, with a foreword by Nassim Nicholas Taleb, read by Edward O. Thorp. Please note, a PDF of tables and appendices has been included with this audio program.
Preface. Join me in my odyssey through the worlds of science, gambling, and the securities markets. You will see how I overcame risks and reap rewards in Las Vegas, Wall Street, and life. On the way, you'll meet interesting people, from blackjack card counters to investment experts, from movie stars to Nobel Prize winners. And you'll learn about options and other derivatives, hedge funds, and why a simple investment approach beats most investors in the long run, including experts. I began life in the Great Depression of the 1930s. Along with millions of others, my family was struggling to get by from one day to the next. Though we didn't have helpful connections, and I went to public schools, I found a resource that made all the difference. I learned how to think. Some people think in words, some use numbers, and still others work with visual images. I do all of these, but I also think using models. A model is a simplified version of reality, like a street map that shows you how to travel from one part of a city to another, or the vision of a gas as a swarm of tiny elastic balls, ceaselessly bouncing against one another. I learned that simple devices, such as gears, levers, and pulleys, follow basic rules. You could discover the rules by experimenting, and if you got them right, you could then use the rules to predict what would happen in new situations. Most amazing to me was the magic of a crystal set, an early primitive radio made with wire, a mineral crystal, and headphones. Suddenly, I heard voices coming from hundreds or thousands of miles away, carried through the air by some mysterious process. The notion that things I couldn't even see followed rules I could discover just by thinking, and that I could use what I discovered to change the world, inspired me from an early age. Because of circumstances, I was largely self-taught, and that led me to think differently. First, rather than subscribing to widely accepted views, such as, you can't beat the casinos, I checked for myself. Second, since I tested theories by inventing new experiments, I formed the habit of taking the results of pure thought, such as a formula for valuing warrants, and using it profitably. Third, when I set a worthwhile goal for myself, I made a realistic plan and persisted until I succeeded. Fourth, I strove to be consistently rational, not just in a specialized area of science, but in dealing with all aspects of the world. I also learned the value of withholding judgment until I could make a decision based on evidence. I hope my story will show you a unique perspective, and that A Man for All Markets will help you think differently about gambling, investments, risk, money management, wealth building, and life.
Foreword by Nassim Nicholas Taleb. Ed Thorp's memoir reads like a thriller, mixing wearable computers that would have made James Bond proud, shady characters, great scientists, and poisoning attempts, in addition to the sabotage of Ed's car so he would have an accident in the desert. The book reveals a thorough, rigorous, methodical person in search of life, knowledge, financial security, and not least of all, fun. Thorp is also known to be a generous man, intellectually speaking, eager to share his discoveries with random strangers, in print but also in person, something you hope to find in scientists but usually don't. Yet he is humble. He might qualify as the only humble trader on planet Earth, so unless the reader can reinterpret what's between the lines, he or she won't notice that Thorp's contributions are vastly more momentous than he reveals. Why? because of their simplicity, their sheer simplicity. For it is the straightforward character of his contributions and insights that made them both invisible in academia and useful for practitioners. My purpose here is not to explain or summarize the book. Thorp, not surprisingly, writes in a direct, clear, and engaging way. I am here as a trader and a practitioner of mathematical finance to show its importance and put it in context for my community of real-world scientists, traders, and risk-takers in general. That context is as follows. Ed Thorp is the first modern mathematician who successfully used quantitative methods for risk-taking, and most certainly the first mathematician who met financial success doing it. Since then, there has been a cohort of such quants, such as the whiz kids in applied mathematics at SUNY Stony Brook, but Thorp is their dean. His main and most colorful predecessor, Girolamo, sometimes Geronimo Cardano, a 16th-century polymath and mathematician who sort of wrote the first version of Beat the Dealer, was a compulsive gambler. To put it mildly, he was unsuccessful at it, not least because addicts are bad risk-takers. To be convinced, just take a look at the magnificence of Monte Carlo, Las Vegas, and Biarritz, places financed by their compulsion. Cardano's book Liber de Ludo Ali, Book on Games of Chance, was instrumental in the later development of probability, but unlike Thorp's book, was less of an inspiration for gamblers and more for mathematicians. Another mathematician, a French Protestant refugee in London, Abraham de Moivre, a frequenter of gambling joints and the author of The Doctrine of Chances, or A Method for Calculating the Probabilities of Events in Play, 1718, could hardly make both ends meet. One can easily count another half a dozen mathematician gamblers, including greats like Fermat and Huygens, who were either indifferent to the bottom line or not particularly good at mastering it. Before Ed Thorp, mathematicians of gambling had their love of chance largely unrequited. Thorp's method is as follows. He cuts to the chase in identifying a clear edge. That is something that in the long run puts the odds in his favor. The edge has to be obvious and uncomplicated. For instance, calculating the momentum of a roulette wheel, which he did with the first wearable computer, and with no less a co-conspirator than the great Claude Shannon, father of information theory. He estimated a typical edge of roughly 40% per bet. But that part is easy, very easy. It is capturing the edge, converting it into dollars in the bank, restaurant meals, interesting cruises, and Christmas gifts to friends and family. That's the hard part. It is the dosage of your betting, not too little, not too much, that matters in the end. For that, Ed did great work on his own, before the theoretical refinement that came from a third member of the information trio, John Kelly, originator of the famous Kelly criterion, a formula for placing bets that we discuss today, because Ed Thorp made it operational. A bit more about simplicity before we discuss dosing. For an academic judged by his colleagues, rather than the bank manager of his local branch or his tax accountant, a mountain giving birth to a mouse after huge labor is not a very good thing. They prefer the mouse to give birth to a mountain. It is the perception of sophistication that matters. The more complicated, the better. The simple doesn't get you citations, H-values, or some such metric du jour that brings the respect of the university administrators, as they can understand that stuff, but not the substance of the real work. The only academics who escape the burden of complication for complication's sake are the great mathematicians and physicists, and, from what I hear, even for them it's becoming harder and harder in today's funding and ranking environment. Ed was initially an academic, but he favored learning by doing, with his skin in the game. When you reincarnate...
Sample complete. Ready to continue?